So here's what you need to know. Number one, no one knows anything. Absolutely no one knows what the fuck they are talking about. Even the best traders in the world will admit that they are wrong. Half the time, they just punch out of their losers quicker and they hold on to their winners longer, and they happen to invest more money on their winners, okay? That jerk-off economist on CNBC has never placed a bet in his life on the market. He talks about what happened after the fact, and after the fact analysis is useless, and in most cases he's wrong. If these guys knew how to make money, they wouldn't be on CNBC as economists talking about what happened. They would be billion-dollar hedge fund managers, okay? Number two, it's a zero-sum game. Trading like checkers or tennis or poker is a net-sum game. So the winner's winnings are provided by the loser. Just like any money that you earn at the poker table has to be provided by someone at that table. So your winnings are coming from someone's losings, or not in all cases, but for you to make money, it has to be put up by someone else. All right? Someone else provides that money for you to get rich. So the stock market is not a wealth creation system. It's a wealth transfer system from the dumb money to the smart money, from the hundreds of thousands of personal traders losing their fucking shirt to Warren Buffett or George Soros. That's how these guys make $40 billion, because all these guys come into the market losing money. 90% of traders lose money, and the guys who win consistently make an absolute fortune. And that is the nature of the beast. Number three, the monetary system is a giant house of cards. This is an uncomfortable truth. So this entire world monetary system that is supposed to have stability, and you go into a bank and they make all the effort to make it look like this is a respectable, stable facility, is an epic illusion fueled by trillions of dollars in non-existent money. Bears have been predicting this great crash for a while, and I don't disagree. The U.S. debt and deficit keeps going up. Their money is printed by a private corporation that loans it to the U.S. government at interest, which is impossible to pay off. There is no way out of that system. And on top of that, you have a stock market with trillions of dollars in circulation that do not exist. On top of that, you have derivatives and derivatives on derivatives. It is an absolute clusterfuck. And the great crash is inevitable. The question is it going to be 5 years from now? Is it going to be 50 years from now? When are investors going to lose complete confidence in the market, and when is the Fed not going to be able to bail the market out by printing more money and buying up more bonds? I don't know the answer to that question, but I know that for at least the last 13 years that I've been reading, people have been talking about the same things, but the government keeps finding more ways to prop this back up, and I hope that they do. It's a corrupt, disastrous system, but I don't want to be around when that crash goes off, because that's going to be worldwide and it's going to be ugly. With that said, it's not something I think you should worry about to some degree, because there's nothing you can do. The only thing you can do is not invest in the market if you choose. With that said, the market has returned close to 8% over the last 100 years. If you're looking to buy an index fund, that is still an option. But trading is absolute gambling, okay? That's one thing you need to know, and that's point number 4. Trading is gambling. You're placing bets on the direction of the market, and it's absolutely no different than a casino. If you want to call yourself a professional trader and you want to tell people you want to be a pro trader, you might as well say, I want to be a pro gambler, because that is what it is, okay? You're going to be a pro gambler. And pretty much every trader I worked with was a degenerate gambler. A lot of these guys would have two screens going. One screen had their trading charts and stocks, and the other screen had an online poker room where they were playing 3 or 4 poker games. Okay, it is gambling, and that was one of the major factors in my decision to quit trading. When I realized that, I finally gave into the realization that I can't build a system, I can't see consistent earnings, and this is all just fucking gambling. And that was like the final wind out of my sails. Number 5, the markets crash every decade. So, as I said before, boom and bust, that's the cycle of the market. Always has, always will be. And if you look at the chart of the market crash that I've got on the article, you'll see that, and you look at the panics and the crashes that I outlined, you'll see that on average the market crashes about once a decade. So you've been hearing a lot recently in 2016 about a potential stock market crash, and that's probably going to happen within the next couple of years. And that's either going to be the big one, or more likely the Fed will find a way to buy its way out of it, and like they've been doing for the last few crashes, and they will buy up the companies that are too big to fail, and all this bullshit. But anytime people start talking about how the old rules don't apply anymore, like they did in the .com bubble, that means it's usually close to the end. And it's amazing to me how people will just invest their life savings in stocks without even looking at a 100-year S&P chart. Okay, the markets crash every decade. So it's shocking to me how people are always surprised that a crash is coming, or that there could be a crash, and they say, how can we prevent this in the future? You can't. The markets crash. It's what they do. They don't continuously go up. As that there's always fluctuation. With that said, the markets have been going up for the last 100 years, even including inflation, but there are a lot of factors involved in that, and there are plenty of times where you won't have made your money back within 40 years. Okay, if you had bought in 1928, you would not have become even until 1968. Okay, if you had bought in the market at 1964, you would not have become even until 1992. So there is a lot to be said about understanding that if you are planning on putting your savings into the market, you have to be prepared to weather the storms. And that means that you could be losing money for a decade or for 5 years. But you're holding for the long term, right? 30, 40 years. And you are dollar cost averaging into an index fund. That's about the only way that I would recommend playing the market. And even that, I would just rather see you put that money into your own business. Number 6, the game is rigged. You're competing in a zero-sum game against the best, brightest, and most connected people in the world. They have more leverage, more information, better execution, and better connections than you ever will. From spoofing to front running to broker first calls, all these things are going on that you have no part of and no edge in. And the stock market doesn't exist to create wealth. It exists to transfer that wealth from you to them, okay? Even the ex-New York Stock Exchange chief, Dick Grasso, who's been outed numerous times for being completely corrupt, admits that the market is rigged. He says the market has become a highly manipulated gambling casino for the elite, where bank and hedge fund investors, high-frequency traders, and the Fed's massive injection of liquidity into the system have fueled a record-breaking, inflated, and unsustainable market. I'm sorry, that was Madonna Gowding outlining that, but in the link in my article, Dick Grasso does say that the market is rigged. Okay, that is the nature of the game, and you are playing against the best in a game that is rigged, which is why you can look at any study and 99% of traders lose money over the long term. Number 7, the house always wins. So the way to beat the market consistently is to own the exchange, to own the casino. All right. High fees, poor execution, slippage, all these things work against you. And even the biggest and best guys still go broke. Hedge funds go broke all the time. You hear conspiracy guys talk about Wall Street and the things Wall Street doesn't want you to know. Yes, the biggest hedge fund guys have advantages, but they don't know either, okay? They're wrong all the time, and they go broke all the time. Warren Buffett could go broke tomorrow. George Soros could go broke tomorrow. Long-term capital management was one of the biggest hedge funds in the world, run by the best traders from Salomon Brothers, an army of PhDs, and they went broke thinking that they were smarter than the market. They lost billions and billions and billions of dollars. So the only person who consistently wins is the house. And the house is the exchange. They win because they make money on every single trade.